Ben ritrovati lunedì mattina sul floor del New York Stock Exchange, una reazione a quelli che sono stati i risultati elettorali nel fine settimana. Ne parliamo approfonditamente con il mio ospite, come vedete qui con me, che è Kenneth Polcari, Managing Director per ICAP Equities. Kenny, thank you so much for being with us.
Thank you for having me. It's always a pleasure.
My pleasure, Kenny. So, Kenny, let's see the reaction this morning. Yes, we're down, but it's not been as dramatic as many people thought.
You know, and I think it's interesting because last night, Twitter and the lines were just lit up with what was going to happen today. And don't forget, Asia did not have an opportunity to react to our non-farm payroll number on Friday. That, taken with the news that happened yesterday out of Europe, Greece, and France, caused a lot of nervousness over in Asia. And Asian markets, as we saw, really got hammered. As the day wore on and moved from Asia into Europe, analysts and strategists got a chance to kind of think about what had happened. The Sarkozy French thing was not a surprise. We've been talking about that for a couple of weeks. Everybody saw that Sarkozy lost the first round. So him losing wasn't necessarily a surprise, and I don't think that's really what was causing so much nervousness. The whole Greece thing has clearly brought it up to the table once again, because now there's no majority in Greece. You've got all these different fractured parties, a fragmented government, or at least what appears to be a fragmented government, and what does that really mean? But after a lot of back and forth and some discussion, it certainly feels like the ECB and the IMF and the European authorities are going to wrap their arms around Greece to make sure that they help it through. That has certainly allayed some of the fear and some of the nervousness, but my sense is that the market still feels it's not stable yet. Yes, we're down less than we were, but the market still feels nervous. Do you know what I mean?
So you think that now investors are more thinking about what the ECB could do next? Well, that's the thing that maybe can support the market?
Well, I certainly think it's brought Europe and Greece right to the forefront again. Certainly it brings France to the forefront again, because people are going to question how is France now going to interact with Germany, how is it going to interact with the negotiated treaties and all that stuff. But I think that's less of a problem. I think people and investors are much more concerned about how they're going to handle Greece again. But listen, investors are also concerned about what's going on in the global market, in the global economy. So our U.S. numbers that we've seen have gotten weaker. We saw our report on Friday, caught everybody off guard a little bit. Our market, took a little bit here on Friday as people try to reassess. And so once again, investors are going to start to focus on the macro data, because we're through earnings season, and they're going to focus on the macro data to see if they get any clue and any sense of where this is going. That, coupled with what's going on in Europe, is going to create kind of the mood over the next couple of months.
Yeah, and you were actually mentioning also in your note that we can be ready now for a few weeks of volatility and uncertainty.
Instability, and certainly out of Greece, we're going to get that instability and uncertainty. And you might get some out of France, but my sense is that he's reached right out to Angela Merkel right away. Clearly
she got a call.
Well, she got the call, and it's all over Twitter that Angela Merkel had this great conversation with Francois Hollande. Well, of course she's had this great conversation. What is she going to do? So that may be less so, but I think the uncertainty and volatility is going to be created over what happens over the next couple of weeks in Greece. Because listen, if Greece should default, I mean, Citibank came out with a report that it said there's a 75% chance now that Greece withdraws from the union. If in fact that starts to be the chatter, then there's going to be a lot of discussion, because there's a lot of money at risk between ECB and IMF. And so we will see all that nervousness come right to the surface again.
And again, coupled with the economy that is still in trouble here in the U.S., you were mentioning, the data that we got on Friday, it can create some instability. Again, we go back there on the market. So what are you looking at now here in the United States?
Well, from a technical level, we needed to hold 1350. Now, what was interesting, last night in futures trading in Asia, we actually broke 1350. I think they traded down to 1346, 47, like that. This morning, though, they rallied back and they really held 1350. That's actually a good sign, because 1350 represents the February lows. And so that's actually a good sign. But what I think we're going to have is, I think we're going to churn. I don't think we're running right back to 1425 or 1450. I think the market's going to churn here, and it's going to have to reassess. I think as long as we hold 1350, it's okay. If we break 1350 and there starts to be more nervousness, there's really no support until you get to the 200-day moving average, which is 1278 on the S&P. That's about 7% down, lower from where we are currently.
So for now, we have, sit and wait again.
Wait and watch, that's right. That's what it is.
Thank you very much, Kenny, for being with us.
Thank you.
E grazie a voi per l'attenzione e buona settimana.